Hello, everyone, and welcome to our mortgage Q&A. I'm just going to invite Owen in here. Um, Now, can you hear me? Just give me a little wave there or a little comment just to make sure you can hear me. But just before, so basically, if you've been avoiding like sorting your mortgage out, then let this be your sign just to watch this video the whole way through to the end because we have some really good questions coming in. And also check out episode 41 of the Crazy House Prices podcast. Sinead from Finance Solutions, and I just put it up last week, but we went through some really good questions there. So, one, can you get funds above the purchase price for renovations? How do you get approved for more than 4 times your salary? What happens if you have credit report issues? So, how long do marks stay on your record? If is switching worth it when your loan to value improves? What's the process for second time buyers or subsequent time buyers, as I like to call them? And can you buy a home far from your workplace if you work remotely? And how do banks assess mixed income for buyers who are part self-employed and part PAYE? There's on there. How are you getting on?
How are you, buddy?
I'm grand. I'm grand. So I was just going through the questions that we covered in the podcast episode with Sinead there. But yeah, thanks for this. And basically, we got loads of questions sent in, and no better man than yourself to answer them. So, first one that I guess we could start with is, where do you actually start? So, let's say you're feeling totally lost and you don't know if you're going to be able to buy or if it's realistic for you. So, where do people start? Like, what should they do in, say, their first 30 days?
Yeah, look, I think there's a lot of people maybe a little bit negative out there when you see the media and they see house prices going up by a certain amount and they don't know where to start and they're hearing horror stories. Like, the thing is, if I have car trouble, I'm going to go to a mechanic. I'm not going to be listening to my uncle who bought maybe during the boom, etc. You talk to a mortgage advisor, so just pick up the phone. It's the only way you're going to get answers to the questions that you have is speak to a mortgage advisor. Like, in a 5-minute phone call, we're going to give you an idea of the budget that you can work on based on the figures you give us. That obviously has to be backed up with paperwork. We'll give you an idea of your monthly repayments. We will cover off the deposit that you need and how you could possibly raise that. We can go through any questions that you obviously have and go through any schemes that may help you that you may not be aware of. I had two calls there late last week with clients who weren't even aware of the Help to Buy scheme, and we think everybody knows it because it's around such a long time. They're like, I didn't realize I could actually buy a house with that scheme. And it's getting you mortgage ready on that simple 5-minute phone call, which is free, by the way, to make sure that when we do apply for the mortgage, you're putting your best application forward for approval. Okay, so that's simply the thing would be to pick up the phone, and I always say to clients, hit the link in my bio. In terms of know where to start their first 30 days, especially after the phone call. I'd always recommend clients do a credit check. I see a lot of people slip up in this. They've gone to Australia, or Canada years ago. They forgot about a credit union loan or, a credit card. And it can trip them up. We will do our best to walk around them. We'll ask you for some extra information if there is something there. But get your credit check. It's the number one I'd tell anybody to do, even if you're 2 or 3 years from applying for a mortgage. It can slip you up in the future, and you don't want that. We all make mistakes at the end of the day. But the main thing is get your credit check. It's free. You can get on the central credit register. That'll be number one. Because the debt never goes away unless you pay it back. Okay. So if there's something there, action it now is probably my biggest advice. Then
And
have a look at
it's not even always a mistake on your part, because I had issues on my credit report. There were two things.
definitely
And
wasn't your part, no.
no, definitely wasn't. Like, one was the bank. The credit card was, I had an old credit card thing from college. Remember when you started college and they start throwing credit cards at you? It was one of
Overdrafts and
them,
everything, yeah.
and I got rid of it. I didn't want it. I cancelled the thing, but they kept trying to take money out of the account for like stamp duty or whatever on the account. So it was their issue, and they had to hold their hands up and say sorry. And then the other issue I had was a credit union. I took a loan out to do my masters, and that credit union then closed down and amalgamated with another one, and then all the records, it just kind of went, credit unions aren't the most organized places, so they messed up. So there was two issues on my report, and You know me on I'm a top class student. So it
No,
wasn't
no
so
problem.
even if it's not your fault, do you know what I mean? These things can come up so you have to check
Yes.
the credit report.
So I won't look at, and that's a very, very valid point, to be fair. And I won't linger too much on the credit history part. But the main thing is that there is something there the lender's looking at. Did you engage? And if it was the lender's fault, can we get some paperwork from the lender to confirm, we closed down so we couldn't write to them or whatever it was? The main thing the lender's looking for, what was the reason? Did you engage? Can we get paperwork to show you engaged? And we try walk around it. And as I said, if it's the lender's fault, they're willing to own up to it. Happy days, we should be okay. But credit history is quite key. The main thing then is looking at what savings you have. So we'll discuss on our phone call what deposit you need. So whether that's through savings, whether you're using one of the government schemes in terms of Help to Buy, where you can get up to €30,000 towards your home, or whether the bank and mum and dad can help you because you're paying such high rent. Because we can see the figures that are on deposit in Ireland nowadays. The bank of mum and dad is a real thing. I keep replying to people. I can't even get a point off my dad, never mind, 30 or 40 grand. But parents are willing to help you out now.
Some people are rich.
Some people are rich,
Not us, but maybe other people, yeah.
But the historical thing in Ireland was we always waited until mommy and daddy passed away until we got anything. Now parents they know the struggle that people are going through, especially in the rental market, and saying, do you know what? If this helps them now, then, and I have it, more importantly, if they have it,
Mm,
they're willing to help it out. And we see that happen in the finance
yeah.
industry. So it's about, am I asking the question? Am I exploring the schemes? Could I walk towards my deposit a little bit quicker, as well? And then check your bank accounts. Are you budgeting correctly each month? The key thing people think is you can't do online shopping, you can't get takeaways, you can't go out for a few pints with the lads. The lender expects you to have a life before, during, and after the mortgage. So once you're not living outside your means, the lender's totally fine. Once you're showing your affordability through your rent or savings, um, but there's no harm setting up a joint account. You know, I get this question all the time from couples who are applying for a mortgage, and they think you have to have a joint account. You don't have to have a joint account. You can have two separate single accounts. But I have seen it a couple of times where one person's saving and the other person is spending. So if
Mm.
one person's savings going up by a grand and the other's is going down by a grand, no savings have happened in the last 6 months. So there's no harm. They literally keep most of your accounts separate. And then when you have your salary going through, both of you transfer into the one account, especially if you're 6 months out from a point. And then any unnecessary accounts, we have this thing in Ireland where we need 6 different accounts for 6 different things. And more times than not, people are missing direct debits on the account they forgot to put money in, and you're just accumulating fees and being charged interest, and it makes things a little bit messy. So just have a kind of a cleanup on your finances after the call, and do that credit check. And anything you're worried about, run by us. But that'd be a big tip for me.
So what you're saying is when people are starting to get into a relationship, the first question they need to be asking their potential partner is, what's the storage of bank accounts? How clean are they? Do you know what I mean? Have you any skeletons in your closet? I'm not worried about exes. I'm worried about bank accounts.
Instead of showing
Yeah,
your Tinder account, show me your online banking.
yeah, exactly. Right then, I got another question in about borrowing. So our borrowing is capped for second or subsequent time buyers, as I call them, at 3.5 times your gross income. Now, I must state that's the max. That doesn't mean you're automatically going to get that. And then for first time buyers, it's 4 times the gross
Yes.
income, the gross household income. So why is that? Why is it capped at that?
So I suppose the central bank introduced those rules back in 2015 to kind of just make sure people were borrowing within the means, and the banks weren't lending above their means. Now they were adjusted in 2023 in terms of loan to value, and especially second time borrowers, they used to have 20% deposit versus now 10%. So it's all within sustainability of lending, basically. Now with the central bank rules for you specified second time borrowers, they are capped at the 3.5 times income. And this the beauty of coming to a broker. Our finance solutions, we deal with 8 different lenders, is that your interpretation of income can be viewed differently from one bank to another. To give you an example, Permanent CSB don't take any points up your pay scale if you're a public sector worker. Okay, so if you're a teacher and you're on point three and that's 45 grand, the likes of Bank of Ireland, AIB will actually take point 0.5. If that gives you an extra 5 grand, that's an extra 20,000 if you're a first time buyer and 17.5 if you're a second time buyer. So your interpretation of just 3.5 times salary are different. once again, if you go away from public sector worker, if you have large commission or large bonuses, there's one lender that will walk off and you have 3 years proof of 50% of the 3 year average, where another lender will walk off 100% of the 3 year average. So once again, it's an interpretation of the rules, but the rules are there for a reason. Can you get an exception to that? Yeah. Whether you're a first time buyer, 4 times salary, second time buyers are 3.5. So lenders will generally go up to a maximum of 4.5. Okay. Now they can only pass up to 15% of their loan book. So they are strict on them and they have to manage them. And they manage them weekly. So that's why they have their own rules. So no lender has the same rules when granting an exemption. We'll run the calculators, we'll look at your income metrics, your savings, etc. And we'll run some figures and see if it's possible. And that may sway your decision going with one lender versus another, but they are there for a reason. I assume the 3.5 times for second time buyers is someone in the central bank decided, if you're a second timer and you're selling your home, you might have a bit of equity there. If you're selling for 400 grand and you owe 250, 150 grand of a deposit to use, versus a first time buyer may not have that. And that's totally a guess in regards to that. But you can get exemptions, and it's important that you do go to a broker who deals with multiple lenders to squeeze as much of that income out of the lenders as possible.
Yeah, I know people because people will hear in other countries that you might be able to get 5, 6 times your income. But I think if you look back to 2008, there's a reason why, that's not a good idea. And what I would always say to people is, like, if that happened, if we went back to 5, 6, or if we went up to that, the house price is just gonna go up even more then anyway. So in a way, house prices are obviously, as no one knows more than I do, they're going through the roof every month, but they'd be even worse if they kinda took the reins off the lending limits there as well. So
It's
it
the
would
same
just
with the
be
schemes, Kieran.
yeah.
Like people are, to put it bluntly, pissed off as second time buyers that don't want to buy new builds, you
Mm.
know, and they can't use the schemes. So there's always going to be kind of things that'll go in your favor and things that won't go in your favor. It's important that you just engage with a broker that can give you the full set of information and know what you can work with and give you that information and literally be in your corner every aspect, no matter how long it takes. That, look, we're going to get you in that home. It might take 6 months. It might take 5 years,
Mm.
but it's just about being in your corner and having you informed on every aspect that will help you get your approval.
I get a lot of stuff in from, and I'm always championing solo buyers, people trying to buy on their own, because I think it's tough for everybody, but it's even worse for them. It's really, really difficult, but it's not impossible. And so, if people are following my Instagram, they'll notice a lot of the good news stories are based on kind of solo buyers, because I am aware that it's so tough for them. What kind of incomes are you seeing at the moment with your successful solo buyers? What kind of incomes are you seeing for them that are buying in, say, the cities like Cork or Dublin?
Yeah, so it's naturally going to be higher in the major cities like Dublin and Cork, and this is where people can feel a little bit defeated, especially if they're buying on their own, because naturally two incomes more than not is going to be get you a higher mortgage than one person. So if you look at the latest CSO figures, like the median price is 375, which is more than achievable for most, but in Dublin it's 492. So, okay, if we're looking at first time buyers, the income you need is going to be 110,700 to buy a median house in Dublin, whereas it's 84,375 nationally. Now, if your income doesn't qualify you, we touched on it briefly, we could possibly look for an exemption. Uh, Most lenders, 4.5. Some lenders, depending on the income, will even go up to 4.75 times income. We talked about public sector workers take 2 points up the pay scale. If that's not possible, we can look at government schemes. So a lot of solar buyers have been successful with the first home scheme in terms of if new builds have been outside their reach, and you can get through the first home scheme up to 20% of the property value through that scheme. There's a lot of kind of negativity as well around certain schemes and stuff like that. But if that helps you get the mortgage you need or the property that you need because your income doesn't qualify you for the amount you need, then, take advantage of the scheme and know the terms and conditions around the schemes. And like from my point of view, I say to clients, just get the government's interest out of your property as soon as possible, because any future equity is then yours if you decide to sell it once you pay it off. And there's no interest charge for the first 5 years anyway. So, you know, a new build in Dublin, you can get 30 grand to Help to Buy, you can get your 20 grand extra to cover your 10% deposit through savings and gift. You need an income of about 87 and a half. So not quite the 110, But once again, that's because the government scheme of the Help to Buy is helping you out and bridging that gap. And then the first home scheme, you get the 100 grand from that because that's 20% of the purchase price. So as opposed to you being on 110 grand now, if you're on 87 grand with a new build with the Help to Government schemes, you can buy a new build in Dublin.
And
And
it's better than renting.
well, look
But
at there's 13,000 homes for sale on daft.ie right now versus 2,000 for rent. So we can give out about how hard it is to buy. Like if you're in a rental situation, you can't get your deposit. It's much more challenging. And I really, really do feel for people out there, especially in the rental market with no end in sight. And this is why I always encourage anybody. Like we're always free for a phone call. We've over 78 staff here to pick up the phone because you mightn't be aware that you could get approval. You might be aware of a way of raising your deposit. It's just asking the question and putting the plan in place. But did you see the commuter series I just started?
mm, yeah,
So the CSO, the house prices went up by Dublin by over 5%, but it's 9.2% nationally. So people are actually looking outside of Dublin now,
mm,
and I think Ken thinks I probably work for Westmeath County Council with another post I put about Mullingar. But like I just put a great example up there where I said the highlight was you can buy this 2-bed new build. Now it's not 3-bed semi, but it's a 2-bed to get you on the property ladder with €1,000 in savings because the house price was 310. So you get your 30 grand in the Help to Buy, you have your €1,000 savings. So someone that's in a high rent that may want to look slightly outside Dublin because that's all they can afford, and the income was a lot lower. Like it was 69,000 of an income, so much lower, and 40 minutes outside of Dublin. And if they used the forced home scheme, because you can bridge the gap, all they needed was a 54 grand income. Okay, now I know the national average is 45, but we're just looking at different ways, especially outside of Dublin, how people could buy. Not too far out where it's like it's not realistic for you to travel each day, but we're just looking at ways that, make people think, well, do you know what? I'm not going to get my ideal, beautiful house that is going to be my forever home. But most people move 2 or 3 times throughout their lifetime. And that home that you buy that gets you out of rental market and gets you that home that you need to buy now at an affordable monthly repayment, that equity that you build up because property prices, unfortunately, are going to continue to increase, that can be used if your situation improves or you meet someone or whatever happens on the deposit on the next home, which could be your forever home.
mm. Geez, I'm hearing those figures and I'm just thinking, I'm 11 years teaching and I'm nowhere near that income. Like that's for a two-bed in Mullingar. Jesus. Anyway, that's pretty grim. But I know what you're saying. Like that's
54,000.
you 60. No, I'm not nowhere near it. No, after 11 years. No. Yeah, I know.
I need to look at those teaching scouts.
Yeah, I know. Shocking. But then, right, someone sent a funny question in, and I
Yeah.
can't remember my first mortgage repayment, but they asked, is the first mortgage repayment always more expensive? Is that something to do with like a document fee or something? Is that added on?
No,
Am I thinking of a
no.
car?
Probably the car finance or something
And I'm
like
thinking of
that.
PCP. So
It's always going
you're
to be
more.
more. It's always going to be more expensive because you're borrowing the max approval, and naturally over the years, your mortgage is going down, the balance going down. So you're charged capital and interest on it. But it'll always depend on the interest as well. Like I've had clients that drew down with, let's say, Finance Ireland who have now stopped lending in Ireland 3 years ago, and they were offering 2.35%, and then clients were being rolled off on the 3-year fixed rate at 6%. So happy moods.
Hmm,
So
yeah, yeah,
naturally their rate went up. So it depends on the rate, but your mortgage balance is always going to be the highest at the start. So naturally, it's going to be higher.
yeah, yeah, I get you. Then what happens if your mortgage approval is about to expire because, say, like a purchase is delayed, which is, the norm, especially if it's a new build or whatever with connections or I don't want to just keep going on about new builds, but like,
Yeah.
and like all kind of paperwork for an older house or whatever. What happens there if your approval is about to expire?
So yeah, this is key. We always reach out to our clients at least 2 weeks before either their approval AIP expires or before their loan offer expires. So loan offer is basically when they're sale agreed in the home. Uh, and you mentioned there briefly on the new build, there can be delays, not necessarily on the house being built, but the utilities.
Yeah.
Um, And then if you go back to second-hand homes, the majority of the delays that we see in finance solutions are usually qualification of title issues as well. So from a legal aspect, there might be planning for an attic conversion or, an extension that was built, etc. Or the favorite one that we spoke about briefly before, Kieran, probate. Property's going on the market and it takes six, in some cases I've seen 12 months before being resolved. So what we do is your loan offer is valid. So loan offer is the legal pack that goes out to your solicitor that allows you to sign contracts. That's valid for 6 months. We reach out to you 2 weeks beforehand to make sure no circumstances have changed, and we'll tell you what documents you need to extend that by a further 6 months. So it's no problem. The lender understands there's going to be delays, whether it's new builds or second-hand homes that are out of your control. But we'll tell you what documents are needed. What I would say is important is that you continue to show your affordability for the mortgage payment until you get your keys.
Yeah.
The issue is if you go to loan offer expires and you stop saving and that savings is your way of showing affordability, you are at risk of the bank not renewing your loan offer. The same as your rent. If you stop renting, you move back home and you just haven't saved. Your affordability was rent, you've no longer done that. The bank sees that. It's an issue. Changing jobs, consult with us. We don't want you remaining in, a job that you hate, or if there's a brilliant opportunity elsewhere, just run it by us. We'll tell you if it's going to affect your application. But the bank doesn't want to come back to you with bad news. The bank makes money off you. Believe it or not,
Yeah,
people who
exactly.
see the
Yeah, yeah.
banks as the bad people, they make a serious amount of money off you. So they do want to lend to you. But if your circumstances are going to change, that's where it could affect your approval. And where does it come up? When something expires. So I always say to clients, if something's going to change, let us know.
Yeah, the jobs thing always comes up, and I do say that to people as well. People like banks aren't like goalkeepers trying to stop you scoring. They're like they're stepping aside. They're like, "Here's an open goal. Just make sure you pay us back." But the changing jobs thing is something that does come up a lot. So people are either, I feel a lot of the time people are kind of one extreme to the other. They're either worried and they're like, no, I absolutely can't change job because I heard then I've got a probation period then, or they might just not even know, and they've changed jobs, haven't said anything to their broker, and then so it's maybe just making sure that people understand it. Just it's not it's not a yes or a no, but just everything depends. I hate that answer, but it does. But you just have to talk. It could be if the job's in the same industry, you might be all right. If it's in the same company, if it's a promote, whatever. But if you
People
just have to have a chat. Like
have the
don't
chat.
keep it to yourself. Like
But I think people are nearly afraid. Like people think, like
mm.
even never mind the banks. I think people are afraid to like upset their broker or something. Or, oh geez, I can't ask them that, or I can't tell them I've changed jobs. I'd rather you tell me than not tell me, because if it
yeah,
comes up at the last minute, I'm the bad person that's going to tell you
yeah,
bad
yeah,
news.
yeah.
So just run it by a broker.
Yeah, yeah, perfect. And what kind of timelines are you seeing at the moment with successful buyers in terms of, um, like how long it's taken to go from say sale agreed to keys in hand? What's the kind of average you're seeing?
Like you're probably averaging around 4 months. Like I've seen a good few cases go now very, very smoothly, 8 to 12 weeks from
Nice.
sale agreed to completion date. But like as I said to you, there's so many delays that can happen, especially on new builds. Utility companies are delaying.
Now I have lost audio. Can you hear me? I've lost your audio there. I don't know whether it's me or whether it's you. I'll just
You hear me now?
um yeah, I can hear you now. Yeah,
I
yeah.
think someone
Mm.
was trying to ring me there. Maybe I said the wrong. Maybe I said the
It's
wrong thing.
well, it's one of your clients knowing that it's 8:30 in the evening. He'll answer this question, but the sound should be back now for everyone else. But yeah, just making sure that like you understand what's going to cause delays. But there's so many different things, and I think when people come from, especially when they come from other countries where you can buy a house in a day or whatever, they come to Ireland, they're like, "What is the story here? Why is everything's taking so long?"
Do you know what? Like I have to give a huge prop to huge kudos to Newer Money. Newer Money have been unbelievable since they've come in. I'm not sure if you've heard much about them. The
Yeah,
rates
yeah,
aren't overly competitive. Well, they're actually the highest out there when you're paying less than 30% deposit, okay? But they're very, very competitive if you're paying a 30% deposit. I know some people are probably like, who's paying 30% deposit? But for switchers or someone looking to release
yeah, yeah,
equity, they are by far the quickest out there. Like they'll get you to loan offer in 24 hours. So they're really putting up, like, forget about the rates for now, because I do think they'll adjust them. But they are putting up to the banks, the pillar banks, in terms of what are you guys actually doing in
mm,
terms of your turnaround times. Like because some banks are taking 3 weeks to come back with a loan offer, and they're coming back with a loan offer in 24 hours. So this is kind of a thing that we will do with clients. We'll go through a few questions when we're assessing, because people think a broker applies to 8 different lenders. No. And we definitely don't have the time to apply to 8 different lenders. And think about it, an estate agent only needs one approval in principle. They don't need eight, especially if they're higher rates or they don't get you the mortgage you need. But yeah, that's what when we're assessing clients' information, we will, on the follow up call, kind of bounce a couple of questions to them. Are you looking at new build? Are you looking at second hand? Are you looking at overpayment options? Are you looking for max approval? Are you looking for an exemption? Are you looking at government schemes? And we'll able to then nudge them towards a lender that we feel meets their needs, and then the final decision is theirs.
Very good. Right. One more then. And then if people want to ask a question, maybe we might take two or three at the end. There's a little
What score is
question
United
box there.
again?
We're winning 1-0.
Are we winning?
Yeah, yeah,
Oh, it's
saw
a Christmas
that.
miracle.
For now. Yeah, I'm at. Anyway, what's the kind of one big mistake outside of maybe not checking their credit history, credit report? What's the one mistake you're seeing kind of buyers make again and again that costs them either time or money?
Time is not showing you can afford a mortgage. I've had clients on 6 figures and they can't show me through regular savings or rent that they can afford a €1,500 payment. It's people think I have a net income of 6 grand, the mortgage payments 1,500. What's the problem? And to be fair to them, they're right,
Mm,
because they clearly can't afford it. And in other countries, we don't have a repayment capacity, you know. But this is the importance of reaching out to us 6 months beforehand. Is we can tell you, right, what mortgage you're looking for. This is what you need to show through savings or rent. If you do that, I will get you your mortgage approved. If you don't, you're going to get annoyed. And
yeah.
you're going to have to wait a further 6 months. So, showing you can afford a mortgage, don't guess the mortgage process. Talk to us 6 months before you apply.
Okay. And there's a question here. So, how many scales can a civil servant or say public sector worker go up on the pay scale? I know different lenders have
Yeah. Yeah.
different ones.
Not most lenders. Some lenders don't even take points up the pay scale. But most lenders will take 2 points up the pay scale. And obviously, if you skip a point, because I
Mm,
know some teachers, I think it's point 8 and point 12 is skipped. So
yeah,
nearly 3 points. ICS will actually take 3 points up the pay scale, but the rates aren't that competitive.
3 points. Anyone being any more generous than 3 points now?
Definitely not.
Well,
Oh,
I can,
3 points
I
tonight.
yeah, Hey, I can understand why they do it because like it means then they're guaranteed to be on that income in a couple of years' time.
Yeah.
So it makes sense for them to. People might hear that and think that might be a bit reckless. They're going up the skip, but like you could go six, 7 points up the
Oh,
pay scale.
Jesus, no.
I know.
Stop that.
Sorry, I get it all day, all day. I've had
Stop
it
the
today.
dad.
It's still. You would be amazed how many times those two numbers come up during a maths lesson. It's unbelievable. Sorry, but the like people think that might think that's a little bit reckless, but it's like you're going to be paying your mortgage for whatever 25, 30 years. So it's it makes sense for them to do it. Now, just to say to people, if you're putting a question in, put it in the box. Don't put it in the comments. I can't keep up with the comments because people are coming and going. It's hard. So there's a little question box there. There was something about the vacant home grant though. Do you know much about that in terms of mortgages and all that, or is it really
Yeah.
tricky?
It's, do you know what? It's it's worked less times than it actually has worked, if you get me. Um, it's a great scheme because you go around Dublin and even certain rural places, there's, shops boarded up, there's houses boarded up in prime locations. And people are looking outside the box there. I don't want a new build or I can't afford a new build. So they're looking at this house is now 150 grand. It probably needs 100 grand of works. So if I can get 50 grand if it's been uh, vacant for the last 2 years, and if I can get an extra 20 grand if it's derelict, happy days. That'll help me with my renovation. So surely the bank will not have an issue with this. The issue with the Creek Home scheme or the vacant home scheme is the banks won't allow it to go towards your funding. And the main reason behind that is the grant is paid out after everything's done.
Yeah, yeah.
So that's the issue from the bank's perspective. So I'm not sure, whether if the right people who made these decisions and came out with these were speaking to the banks. I'm not sure. But that's the main issue. So what happens here?
What do you mean on you? Do you think they'd come out and release a scheme without doing the due diligence and making sure things would work and all that kind of stuff.
I'll get me
No
something bigger
way.
points on it. But so if you're looking at a portion to renovate, because plenty of people are, okay, because they're
Yeah.
looking outside the box at possibly doing something a little bit different. The bank will only lend to you if the property value increases in line with the works that you're looking to do. So a bank can only give you 90% of the purchase price. So if you're buying a house at I don't know, 300,000, bank can only give you 270, regardless of what your income qualifies for you, because that's 90%. The only way the banks will give you money is if with those works, so let's say you're looking to borrow, let's say the works are costing 50 grand, so 90% of that's 45. So the overall finance is your 270, which is 90% of 300, and 45, which is 90% of the 50 grand worth of work. So the loan is now 305. So in order for the bank to allow you to finance that, the house value has to increase to 350 because 90% of
Okay.
350 is 305. And the only way you'd show that is I say to clients, when your sale agreed, get a builder's quote for me, and the valuer will go out and say it's worth 300 at the moment, but when these works are done, if it's worth 350, we can then give you the money. Okay, so that's what way it works with a portrait and renovate. So you either have to have the funds yourself if you're doing a portrait and renovate without the creek owner, or you have to qualify for enough be able to borrow from the bank to give you the additional funds to do these works. So it's mainly structural works. Borrowing money to put furniture in the house, paint the ceilings, it's not going to increase the value.
Yeah. Right. We'll do one more and then we'll leave it there. Should be a question on the screen there. Is it true that Haven are the only lenders willing to work with Irish citizens if they're buying from abroad?
No, Bank of Ireland will look at it also. So Haven are kind of the well-known one now. Haven are the broker channel of AIB. You'll need a 30% deposit, max term is 25 years, and they do discount your income that's non-euro by 20%. But they're giving you home loan rates when you're still living abroad. So you're not facing the headache of returning home to a rental market. You're returning to your family home and getting that home loan rates as well. Bank of Ireland, they have certain criteria around it. And mostly they do kind of want you to prove you can return home. So whether that's a future contract, etc. But Bank of Ireland are a second option now for clients.
Deadly. And just on that, someone was asking there about renovation mortgages. That's something I spoke with Sinead about, Sinead from Finance Solutions in episode 41. As I said at the start, went through a few other bits there as well on that. And then also I have a post on my page about that exact thing with expat mortgages that I did with yourself. And there's a huge amount of info in that there as well. So people want to check that out. And we'll leave it there. Look, financesolutions.ie, and people can get in touch through there and book in a call. As I always say to people, it's like it's like a matchmaking service that's free, doesn't cost you anything. And instead of setting you up on a date, they set you up with a mortgage. And that's basically what you guys do. So to reach out, it's free. I think people don't really get that it's free. Like they don't pay, you're not getting paid. They don't pay you. You get paid by the lender when they draw down, which could take 2 years, and you're putting all this work in for free. So it's an absolute no-brainer for me. People need to go to a broker to save yourself a load of stress, put all the stress onto Owen. um, Owen's actually only 21 years of age. He just looks really old from all the stress of taking on people's mortgages.
I'm going like Benjamin Button here due to this job.
What are you joking? Anyway, we'll leave it there. Nice one, Owen. Really appreciate it.
Thanks, Carol. Appreciate it.
Cheers.